This tutorial is Credit Policy 101. We're going to focus on what a credit policy is and how to actually construct an effective credit policy. So the learning objectives for today is really to help understand that credit policies set the rules of the road for your company. It establishes how you review the creditworthiness of applicants and how much credit your company is willing to extend. Many companies don't have a credit policy, so one of the objectives today is that if you don't have one, how you can actually begin to develop a credit policy from its very beginning. Hopefully, by the end of this tutorial, you'll better understand the need to adapt credit policies in alignment with the very dynamic economies and business changes that we're all affected by today. You're going to understand the basics of a credit policy and key concerns that should be addressed in a credit policy and the components that you should be including. So here's the agenda for today. What is a credit policy? Why even have a credit policy at all? And what you should include in your credit policy, and how to tailor and build a credit policy that's applicable to business in our current environment. So if you take a look at a completed comprehensive credit policy, it should have a number of components that will be very helpful for your company. First of all, it creates consistency in credit-related decisions. One of the things that is very irritating to salespeople is that credit policies are not, or credit decisions are not consistent. That it's one thing one day and it's another thing another day. By having a great, well-established credit policy, there's consistency. It also outlines critical requirements for legal compliance, something that's a growing concern in business today. It establishes a mission statement, which really characterizes what it is that your company's goals and objectives and strategies are in terms of addressing credit extensions. It also clearly communicates the importance of the largest asset, or maybe the second largest asset in a company, and that's accounts receivable. And it sets the stage for long-term sustainability of your working capital and cash flow, etc. So what's the difference between a credit policy and a procedure? This question comes up very often. And they could be combined. You could have a policy and a procedural document. But basically, a policy is focused. It's brief. It states the guidelines for a company to establish and manage its credit relationships with its customers. Approval and changes are signed off by the highest authority in the company. That really gives it the legitimacy and the credibility and the authority to be adhered to. A procedure or process document details how to implement your policy, specific steps required to comply with your credit policy. It can be modified from time to time as changes happen in your organization or realignments, but unlike a policy, it is much more fluid. And it can, changes in procedure or process can be approved at a local level. Changes in your policy are much more formal and require the highest level of your company to sign off on those changes.